Live from Dallas, Texas, I'm Adrian Manns for the Money Show. I'm here today with Chris Gaffney of TIAA, and we're going to talk about diversifying portfolios, diversifying risk. Chris, thanks for joining me. Let's talk about some of the asset classes that you're advising clients to invest in.
Certainly. I'm in charge of the World Markets Division at TIAA, and we specialize in precious metals and foreign currencies. So we present these to individual investors as a way to diversify their portfolios so that they don't just hold equities and fixed income in their portfolios. And by adding non-correlated asset classes, and that's a concept that, asset classes that don't move in the same direction given certain economic fundamentals, you can actually decrease the overall risk of your portfolio and increase overall returns.
And smooth the returns, right?
Exactly.
It gives you a nice smoothing factor on the curve. So what do you see as being the primary risk right now to an investor's portfolio?
Well, volatility is certainly heated up, and while the markets are chugging higher, there is some questions about, trade wars in particular, questions about the future of the global markets, but geopolitical risks are really the ones that bubble up. When you get, if we get a shooting war in the Middle East, we've seen tensions heat up with Iran and some of the oil producers over there. At the same time, you've got some political rest in Hong Kong. China is definitely trying to be very careful about the way they treat those individuals, but that could blow up into a larger. And North Korea is still there. We've got a nuclear power who we were sitting at the table with them. We were trying to reach an agreement, but so there's a lot of geopolitical risks across the globe that could really bubble up and cause problems for the markets.
Yeah, I think we're order flow traders, and in our business we sort of classify it as there's good volatility, there's bad volatility. Headline driven volatility tends to be the bad stuff for us. Are you watching any particular indicators of volatility? Are you looking at the VIX? Or are you looking at?
Yeah, the VIX is mainly what we look at, and with the equity markets are the main market that everyone focuses on, that investors focus on. So that volatility index has been spiking here recently. We came through a period of very low volatility where investors didn't have a whole lot to worry about, and the markets were all kind of moving higher generally. Right. And diversification really wasn't important. If you look at overall returns, you were just fine just riding the market index. You didn't have to be selective. You just, as long as you're in the market, you're good. But now that volatility has increased, I think stock selection and asset selection is going to be much more important because we're starting to see those assets move in different directions, and so that correlation is decreasing right now.
Yeah, I was talking to a group this morning, and I said, if you're not a trader, you really need to make sure you're fully diversified. We're 80% short right now in our equities trading. And that's not a possibility for a lot of investors, right? So you need to invest wisely and invest in something that's very diversified. Interesting. So, all right, we'll be back in a moment. We get Chris back on the hot seat here in a second. But live from Dallas, Texas, I'm Adrian Manns.